Hey, good morning, everyone. Good morning, good afternoon, and good evening, everyone, depending on where you're tuning in from, right? Just checking if everyone is able to see me and to hear me clearly. Hey guys, just checking is everyone able to see me and hear me clearly, right? I just checking, just sorting out my windows here and there. Okay, sounds good, sounds good. This should be the second last, right? This is the second last pre-market life analysis for the year. We'll still be doing the pre-market analysis next year, right? But this should be the second last one because the next one will be 18th of December, right? After that is just Christmas and New Year, right? So the second last one. Right, Yamilu, okay. Thanks for letting me know. We can begin today's session, but yeah, I got a message early from Mosea, right? To take a quick look at dollar ZAR and pound dollar, right? I'll take a look at them in a bit, okay? Right. Yeah, but guys, if you are experiencing any issues with lag or audio or video, just let me know, right? My internet speed should be okay, but just in case, yeah, then let me know. All right, guys. Yeah, but how has everyone's trading been going, man? Right. If you don't mind sharing with me, right? You guys have been hanging out here for about a better part of a year already, right? Depending on when you tuned in, right? So if you like to share a little bit about how you found your trading, whether it's been improving and which areas you'd like me to focus a little bit more on, moving on into 2024 because we're planning the curriculum, right, for the IC Markets educational webinars, right? How the live analysis sessions are structured, right? So if you have any special requests, let me know because I'm already starting to plan what we are gonna cover here at IC Markets 2024 onwards. Okay. Yeah, but anyway, let's begin today's session, right? So it's the weekly pre-market live analysis, where we look at the key movements that we can expect for the week ahead. So it's slightly longer term, meaning that we're not looking at the 1 hour chart or the 4 hour chart. We're looking at the 1 day time frame, right? So the 1 day time frame, roughly, right, depending on how you draw it, right, should be able to allow you to establish a longer term view for the week, right? Then from there, you can start establishing your 4 hour views and 1 hour views. 4 hour time frame and 1 hour time frame views, right? But the 1 day time frame helps you establish that higher time frame view, at least from what we can expect for this week. All right. So, without further ado, disclaimer: just remember that everything in this webinar is educational in nature. Nothing should be construed as investment or trading advice. So please do your own due diligence before you guys trade. Right, really, really important. Right. Of course, moving on from here. For those of you guys who are here and you're wondering, right, what is covered, right? So we have the key news events, right? Usually we kind of there has been request that the key news events can be covered towards maybe the end of the session or in the next session about 13 and a half hours from now, right? So I will focus.
I can't do that just yet.
So I will focus a little bit more on the analysis of the majors, the requests. I can see Ren saying that pound dollar and Aussie dollar, right? But yeah, if you have any specific instruments you want me to take a look at, let me know. I'll do my best to kind of get to them. All right, so this is whether it's on the crosses, right, the minors, right, commodities, indices, let me know. Right, I will usually cover most of the major ones. Sophie, good. If you're from London, then it should be good evening, right? Good evening if you're tuning in from London, right? Thanks for spending, right? Thanks for spending your evening, right? Your Sunday evening in this webinar, right? Really appreciate it. Okay. Now, just give me a second while I navigate. All right, so introducing your host for today. For those of you guys who are not familiar with who I am or here for the first time, or then you know who's this guy over here, right? My name is Desmond Leong, right? So I run the award-winning research firm Everest Fortune Group and the Forex Army, right? We're finalists for 2019, 2020, and 2021 for best FX and best equity research, right? Prop firm trader, right? I was told to take the test, right? When I take one of those tests, I had to redact the names because it cannot look in any way that we are endorsing any of these companies, right? But yeah, I just took one of those funded trader tests, 100 grand, passed I think a couple of months ago, weeks or months ago, right? So we know what we're doing, and I can let you know that I pass all this just by applying what we learned today, right? The analysis, some of the key setups for the day, for the week, and of course a combination of Fibonacci, support and resistance, trend lines, momentum, right, correlation. Those are the things that powers our trading strategies. All right, so you see me apply them time and time again, right, in these webinars, right? What I like to do is I like to really take the time, right, to explain to you how I arrive at each analysis. So you won't see me like just throwing a chart out at you and saying, oh, this is the analysis for the week, right? Instead, I'll show you how I methodically go through the charts and like, all right, this is how I came to that conclusion. Okay, so the thought process is very important, which I'll be teaching you guys. All right, so yep, that's it for me. Right. Thanks for tuning in for today's session. So let's begin. Okay, we begin first with the with the charts. All right, we begin first with the charts. Yep, yeah, kind of shot up to where we kind of expected it to go. Okay, let's begin with the XY. Let's begin with the XY today. Just give me a second while I get a quick water. Okay. All right, just let me nudge myself a bit to the left. Okay, so let's begin with DXY. So you guys know my approach, right? Thank you, Path, right? uh, all right, yeah, thank you, Path. Yes, really kind words. I really appreciate it. Yeah, these are the kind of comments that keep me going. If there's anything I want to let you guys know that you don't need to spend what 4 5 grand on courses to trade well. A lot of it you can learn over here, right? I think you can learn it for free, but just the dangerous thing about trading is that you must learn it from the right people, right? People sometimes treat trading like yeah, I know you guys heard me share about it before, but yeah, people often treat trading like studying for their exam, right? They think that the more they study, the better they do, right? While it's important to study and to learn about the markets, right? The dangerous things is that there are people out there who teach the wrong things, right? And you end up not just studying, but studying the wrong things and applying that to your money, right? And that sometimes can really take you off course. Some people that some of my staff who come in and they learn, right? So a part of it is teaching them to forget what they learned previously, right? Because some of the stuff they read online, just because someone has a voice, is able to type, shares their ideas on the forum, right, does not mean that they are a good trader, does not mean that it's correct, it's just their opinion, right? So a lot of these are online, a lot of people are sharing their ideas, but they might not be good ideas in the first place, to trade with. Okay, so yeah, that's one of the things that I want to encourage you guys that, apply discretion when it comes to trading. And of course, in such situations, right, what we try to do, what we try to do is we try to, what's the word for it, share with you as much, like teach you to fish, not just give you a fish. Okay. Good stuff, man, Path. Thank you for your kind words. All right. So starting today's session, we have we have DXY. So I look at DXY dollar index to establish a view for the dollar index, right, for the week, because that would set the view for a lot of the other instruments. I usually like to look at a blank chart, just a blank chart like this, right, to help me see things very clearly. Right off the bat, I already notice a very strong resistance level over here, right? I already noticed a very strong resistance level here, right? You can see price responding very nicely, a little bit over here, but these are the levels they're looking for, right? For price to respond very nicely to these levels. Correct. And it looks like price is kind of approaching this level. Okay, so once we establish the resistance, right, then we establish the support, right? So if you look at these levels over here, all right, just look at this, right? Can you draw this, like you try to start from here, right? You got this support level, which, yeah, it is a support level, but it is very far away, right? So you try to bring it closer, right? There aren't any good levels. Maybe you could consider something like this, but I don't like the movement over here. It looks like price kind of just cut it already, right? So you're just looking, and you're like, there is no nice levels, unless you pick this level over here, this swing low support over here. Once you find a level, right, you're like, okay, this is a level, it's not that great. You try to drag it a little bit further back, you usually have the wick of the candle, right? So I'm going to zoom in here. You have this candle wick to play up and down, right? You have this candle wick to move up and down to see if you can find a better level at the back, right? So if I drag this all the way to the back over here, right, not that nice, but I can shift it up a bit, the wick, so that I can catch this level over here, right? So that to me is still not that bad, right? It's still not that bad because where's my, you notice how there's a little bit of price stopping at this level a bit, so it forms a better base, right, to suggest why you might be seeing a bounce over here. Okay, so this is how you can establish like your support and resistance levels, right? So sometimes it's very tricky, right? Right, so in this case, we got a decent support, a decent resistance. What we then do next is we apply a little bit of we recommend that use the current bit rate is lower than the recommended bit rate. I am just checking if you guys are experiencing any audio or video issues, right? I just got a small little pop-up here on YouTube, but it still says that it's pretty good connection, right? So but it's a bitrate issue, so let me know if you guys are experiencing any connection issues. All right, okay, so what I then do next is I draw Fibonacci to kind of fine-tune it. All right, Fibonacci from bottom to the top. I noticed that there's the 38% and the 50% over here. So the thing about Fibonacci, all right, the thing about Fibonacci is that you need to spend more time filtering out the Fibonacci's, right? So if I look at a whole wide range of the Fibonacci levels over here, you got the 23%, which you can't use anymore, right? Because price has crossed over it already, right? You got 38%, which is quite close. You can arguably say 38% and 50% are quite close, right? You got 78%, which is too far, 61.8, which is a little bit, no, maybe it's not too far, okay? So I have these three Fibonacci's which are considering, okay? The 38%, the 50%, and the 61.2. Among these three, right, among these three, the level which is closest to this overlap resistance, right, can be said is the 38 and 50%, all right? Now, how do I go about picking which one? Which one I should use, okay? Let me show you. Let's start with the 38 and 50%. So you got 30 and 50% over here. On one hand, right, on one hand, you can establish your resistance level as here. Right? On one hand, we can establish the resistance level as here. Right? On another hand, you can establish the resistance level as over here. If you pick the 38% retracement, you can use this, and you have a nice little bit of a overlap kind of resistance over here, right? On the other hand, you got 50%, right? I can confidently tell you that both are okay, right? Both are okay. This 50% allows you a little bit more tightness, right? With price pulling back to this level where it broke out very nicely from. But one reason why I don't mind the 38% retracement is because why I don't mind the 38% retracement is because we can actually see that price was responding very nicely to here. Nice reaction, nice bounce from here, right? Nice little bit of reaction over here, nice little bit of reaction over here, right? So you can establish that, the 38% Fibonacci retracement is also a decent level to use, right? And those of you guys who know the Nike tick reversal, let's see, 127 comes up to here. Okay, so it's there, that's fine, right? So I would say that the view for this week is bearishness below this level to push prices down to first support, right? This would be more or less my view for this week for DXY. Okay, if I have to pick another level, right, for stop loss or something, right, you could consider the 61.8 retracement over here, where you see price broke out very nicely. I do like the way that price bounced and bounced multiple times before it, right? I do like that it bounced over here, it bounced over here, it had a nice bounce here. What I do not like, right, is I do not like this movement over here, right? I do not like this movement over here. It looks like price, I don't like the way that price just went down and up, like with little regard of that line there. So I don't really like that level, but with the lack of a better level, right, because second resistance levels are technically I wouldn't say not as important, but you need the price to break through the first resistance first, right? So I would put it over here. Usually I'll put it over here, but I don't mind putting it and dragging it as far back as this for the second resistance, okay, to play the move back down to the first support down here, okay? Now, if we are expecting a drop on DXY, it means that we should be expecting a bounce on euro dollar, okay? Let's see what we are expecting a bounce on euro dollar for. So, fresh chart, and let's take a look, okay? We could technically put our support level over here, right? We could technically put our support level over here, which you could establish as an overlap. Drag it further back, it could look something like this. All right, so this could be the support level that you're looking at for euro dollar. Alternatively, there is another support level over here. You notice how when you drag it further back, it actually cuts the levels very nicely, right? It actually cuts levels very nicely, right? You got a very nice big bounce over here, right? You got nice reactions over here. You got nice big bounces over here. So this could be the next support level. So we can confidently say that there are two levels now, right? We got probably this one. We got this one over here, and we got this one over here. Now, if we look at DXY looks like price could technically, right, go up a little bit further, right? Price could technically go up a little bit further. There's a little bit more breathing space before it reaches the resistance, right? For euro dollar, there is just if you pick it this level, it means that you're expecting a bounce right away. But the level which more or less correlates with DXY is actually this level. You have that little bit of a breathing space before it bounces, the same way you technically have a little bit of a breathing space before it drops. Okay, so I am right off the bat, I am thinking that we probably need to use this as the first support. Okay, we probably need to use this as the first support, but I will use dollar franc, right? I'll use dollar franc as the last confirmation for me to decide whether I am going to use that or not. Right, so before I go there, I'm just going to go dollar franc, right? I'm just going to go dollar franc, and I'm going to look at this thing over here. Okay, I'm going to look at dollar franc, and it is very clear that I'm thinking, where can I draw my resistance? The closest place I can draw my resistance is actually up here. This resistance over here. Bitcoin, well, technically you could say there's some correlation between Bitcoin and DXY. We'll take a look at the correlation the correlation charts later, right? But I think it's a lot of it is Bitcoin is driven by, I think, the news of the of interest rates, but not only of interest rates, sorry, but also of the adoption, right? So there's a lot of it where ETFs, right? There's a lot of bullish news for crypto, right? And that is driving the movement of Bitcoin more than the unstableness of dollar index. Some could argue that yes, the USD looks a little bit unstable, which is also driving up Bitcoin, right? And we will take a look at how correlated they are later in a second. Okay, just let me, without losing our train of thought over here, let me just cover the last part on dollar franc, right? You notice that dollar franc is the resistance over here. We can't confidently put any of the resistance levels over here, right? None of it is even good. So dollar franc resistance over here, you could technically drag it as far back as this level, right? You could technically drag it as far back as this level, right? Nice little bit of ways that white price bounce off, reacted off, bounce off. Okay, so nice bit of movement over there. And so if dollar franc is here and tells us that we got a little bit of breathing space before dropping, that means for euro dollar, we should expect a little bit of a drop before a bounce. That means this level cannot be used. Rather, if I were to use this level, right, it is more like an intermediate support. It's more like an intermediate support line, right, with my main support over here. And DXY, if that's the case, what I might do for DXY instead is to use 50% and 50% Fibonacci. So I would move my level over here instead, okay? Because that means that we will be looking for price to go up a little bit more before dropping, right? It might rise up a little bit more before dropping, okay? So this is how you use correlation, right, to really filter out the moves. Okay, this is how we use correlation to get previously we were deciding whether we're going to use the 38% Fibonacci retracement highlighting the area from here, or the 50% Fibonacci retracement highlighting the area from here. Okay, but in this case we're going to use a 50% Fibonacci retracement, right? We're going to use that because of the way euro dollar has a little bit of breathing space before the bounce, and dollar franc has a little bit of a breathing space before the reversal, right? So this is a perfect example of how you use correlation to kind of fine-tune your moves. Okay, now what we can then establish is, okay, if this is the bounce that we're looking at for euro dollar, how high can it bounce to? Naturally, right? Naturally, if you're looking for a bounce from there, you start looking for where there might be resistance. Hardly any resistance, right? I don't think price can bounce all the way up to here, right? This is one resistance level, but if you really lack a better level, you could technically use this, right? Because I'm not so confident of calling price to bounce all the way up to here, right? I think up to here should be enough for the week, okay? So what I then do is I use Fibonacci to fine tune it a little bit more. And you notice that price is, right, testing both the 50% Fibonacci retracement and the 61.8% Fibonacci retracement, right? So I like that the 61.8 retracement lines up so nicely with this first support. So if it really comes down to test it, that'll be pretty nice, right? So 61 and maybe 78. 78 is down here. Second support, I could put it down here where there's a nice little bit of, price holding off, price bouncing quite nicely. So this will establish my second support. And for dollar franc, right, if this is our resistance over here, what I then do, I draw the first Fibonacci retracement. It could be a 50%. 50% Fibonacci right at that level. And it could be a 38% Fibonacci right at level 2. Yes, 38% Fibonacci, 50% Fibonacci, right? I like that the 61.8 retracement is there. So notice that I always tend to use two different Fibonacci levels, right? Two different Fibonacci levels. So in this case, 38 and maybe 50, right? Notice that I find two confluence. So I got one confluence that is over here, and I got a second confluence that it lines up over here, which is perfect because it gives me my potential stop loss level, right? Which is the 50% over here. Last thing I'm going to look at is I'm going to see if there's a Fibonacci projection. Yeah, I'm not sure if you can see it. I'm going to move it down and up. Notice the 100% Fibonacci, it lines up exactly at this level over here. All right, really nice really nice Fibonacci confluence area over here. 38% retracement, 50% retracement, 100% projection that lines up there. So I'm going to, personally for me, I'm going to short this, right, to play the move down to here. If you wanted to play a move, you could play it down to here as the key support level. You could technically, if you know how to look at the levels, you could technically play it down to here also. Right, this is an equally valid level, but I think you got the opportunity to play it down even further, right, to this level for a really, really good 1:3, 1:4. This would be the key setup of the week, right? Dollar franc seems to line up a lot more nicely compared to the rest. Okay, Bitcoin. For some reason I can't, okay, yeah, euro dollar. No, sorry. Well, you could, just looking at the correlation over here, right? A correlation of 1 suggests that it's very strong. Correlation of -1 suggests it's weak. It looks like price has kind of been fluctuating in between. I am not too confident, right? I'm not too confident that there's a strong correlation between Bitcoin and, sorry, this is euro dollar. Right, let me just highlight DXY. Hey, yeah, nice to see you tune in. Yeah, it's not much of a correlation, right? If you look at this, price is really just fluctuating. The correlation coefficient is just fluctuating between both levels. So I can't say that there's a strong correlation between DXY and Bitcoin. If it was strong, look at this, right? We look at DXY, it's a pure value of 1. We look at something which is dollar franc. You notice that it's very strong positive correlation close to 1. It hardly ever goes into the negative region. That is how you know that there's a positive correlation between these two instruments, right? You look at euro dollar, right? It's almost always at -1, right? So that's how you know it's a strong positive correlation. You look at Bitcoin, it's just going up and down. You can't really say, yep, looks like it's strong negative, looks like it's a strong positive. Like you hardly see any of this, right? So I would not say. Rather, my answer to that is that not so much. You can't really use Bitcoin as an indication of the XY direction. Okay, I hope that answers your question, right, Path. Right, Fabio saying, could last week jobs report make a bullish drive on USD? It could, right? But I think the by now most of the market reaction would more or less have been played in already. Okay, most of the market reaction would more or less have been played in already. Give me a quick second. Okay, I'm back, guys. All right, sorry about that. My allergies tend to flare up in the morning. It's crazy. Right. Okay, so we have now looked at all those. We had a request for pound dollar, which we're going to look at, right? Reacted off our intermediate resistance last week very nicely. So what can we expect this week? Yeah, right. I do not check for correlation between the XY and dollar franc because it'll always be there. I'm just using it to let you guys know that that is how strongly negative and strongly positive kind of correlation looks like on the chart when you use the correlation coefficient, right? Because you can then, once you know how it kind of looks like, right, then you compare it with another chart and you wonder, in this case, is there a correlation between DXY and Bitcoin, right? And you can see the movement of the chart for the correlation coefficient, and right off the bat, you know that, probably, right, there isn't a correlation over there. So I'm using a good example of how it looks like, right, to help you filter out whether another correlation coefficient chart that you're looking at is, is valid or invalid. Okay. Now, back to pound dollar, right? So pound dollar should naturally be a little bit, hey Jack, nice to see you, right? So pound dollar would naturally have a little bit of a positive correlation with euro dollar. If you don't believe it, right, you can look at the correlation coefficient and, hey Paz, nice to see you guys tune in, right? So naturally, right, you look at it, you do have a natural, positive correlation between euro dollar and pound dollar, right? Oh, Clinton from Uganda, right? Nice to see you tune in, guys, right? Thanks for tuning in, guys, right? Yeah, so you naturally have a positive correlation, okay? So that means if we were expecting a bounce on euro dollar, right, for price to go a little bit lower before bouncing, that means we should expect the same thing on pound dollar, okay? So what does that look like? Pound dollar, the support level on pound dollar, you can pick one over here, or you could pick another one over here, right? So if you're expecting that little bit of breathing space, right, between euro dollar and pound dollar, right, you could actually put it over here, right? Hey Ivan, hey, it's nice to see that. Hopefully YouTube is picking up the stream a little bit more, right? Thank you guys, right? Help me smash that thumbs up button. Help me smash that thumbs up button if you guys are here, right? You really help the YouTube algorithm be able to pick up the video. All right. So yeah, if you found this useful, please help me smash that thumbs up button. All right. So now, I got a support level here, but if you notice, I could draw it as far back as here, right? And I could argue, right? I could argue that there's a pretty nice bit of a support level here. A little bit of I wouldn't say anomaly, but this part just isn't that nice for me, right? But if you look at all the other levels, right, very, very nicely, it respects it, right? It respects that level. You can even drag it further back onto here, right? But this part, you notice when I drag it back to here, right, it doesn't look that nice anymore. It doesn't look that nice anymore. So instead of that, I would probably use this level, right? I might just use this level, while having this as like a little bit of anomaly, but I don't mind I don't mind that because it just helps me establish that this is a very strong support level. Once we've established the support level, we draw the Fibonacci level right on the bat, 50% Fibonacci retracement, right about there, right? So I like that, you know, there's really strong support. I like that there's a nice 50% Fibonacci level. And if there was a bounce that could be played from here, right? Do not need to be too ambitious. We could play it up to the recent highs, right? It should be enough for the week. All right, it should be enough for the week and a little bit beyond, right? Once you have 50%, you notice that I think there's nothing on 61%, right? Look at 61%, there's nothing, right? So I might just use 70, 50, and 78 as the key, as the next support level down here, right? So we got a second support level down here, 78.6%, that comes down to here for our second support level, right? I can see a question from I can see a question from Pez, right? Hey Desmond, thanks as always. You are I think do a webinar how to properly set up trading view for different fib levels. Yes. Okay. Pez, yeah. I'll get one of my team members to set up to share it in the live trading session later today. Okay, in the live trading session later today. Now, I do want to let you guys know that very simple way that I draw oh, Nike tick. Oh yeah, could be, all right. Clinton, which, yeah, if you're talking about the second support down here, this would be a swing low. In terms of the Fibonacci levels, just let me guide you through what I draw. Okay, I have all fibs basically covers every single fib level until 1.45, right, in the negative region and the above 100 region. From there, I just have 23%, and you notice that once I have 23%, I also have 23 and 38, because if it breaks 23 and I want to say it goes to 38, 23 and 38, 23 and 50, 23 and 61, 23 and 78. Then I got the 38, the bunch of 38 levels, the bunch of 61 levels, the 50 levels, 61 levels. Then I got it goes down to 78 and the 1 to 7, the Nike tick levels down here, right? So it's usually just established that way. It's pretty straightforward, right? You can, if you want, right, you can take a screenshot of it over here on how I set up the different fib levels. Basically, for me, once you click on it, it just filters down to that one exact fib level. Okay, I hope this helps you guys a bit, right? But I'll let my team members know that to explain a little bit more, right, in today's session. Dollar yen, right? Very nice. It broke the remember last week we had a downside confirmation. We said that if price broke the downside confirmation, it will trigger the move down. It went down, hit our profit target, so you have made a good amount of money on that trade, right? So we are one of the few people that was still calling for the drop, even though everyone was so bullish on it, right? So what can we expect this week? Man, I have no idea. I would say there's a fair bit of it looks like price, right? If it holds below this level, this is a very strong level. Look at how price responded so many times to it previously in the past. Yeah, so many times previously in the past. This is clearly a very strong level. So if price holds below this level, people are going to expect a smaller bounce because of this price action. I think you could give it a little bit of a breathing space, right, to this level over here, right? You notice how price was reacting quite a number of times to these levels, right? Okay, so I would say give it that little bit of a breathing space, meaning that we are going to establish this as the big resistance supply block, right? Price should ideally be dropping from here, right? And I think for the week, for it to drop down to this support level, would be enough for us to play, right? This would be a good enough level for us to play back down to this support level, right? Yeah, probably back down to this support level. Hey, Mando, nice to see you tune in, man. Right, I'm starting to see a number of guys that, number of you guys who, my usual guys, right? But yeah, nice to see you tune in, man. It's been a while. So we should expect a bigger drop, right? I might just tweak this around, right? This could be my first resistance, right? This could be my first resistance, and highlighting this as the key support area. Okay, so ideally, we should be seeing a drop anywhere below 146.60 to trigger the move all the way down to the first support, right? So this would be the view for dollar yen for the week. I think it looks, apart from the craziness of the volatility over here, I do quite like that view. Looks like it's about time that the yen start to weaken. Okay, I mean the yen start to strengthen. The dollar yen weaken, yen start to strengthen. Okay, we're on dollar CAD again. Looking at it, hardly anything to look at. Man, that's nothing nice to look at dollar CAD. If I have to pick any few levels, right, this would probably be the first resistance level, right? Just covering the majors over here. First resistance level. There's no good view on dollar CAD. Look at dollar CAD, and then you look at something like dollar franc. Dollar franc, all these levels lining up for this really nice move, right? You could even argue that depending on how price plays itself out, you might be able to see the trend line touch that level directly, right? And then you look at something like dollar CAD, right? Look at dollar CAD and we're like, man, this is nothing. Right? It's hard to find any levels on dollar CAD. Okay, apart from this, maybe a little bit of a trend line, a little bit of a resistance, could kind of push levels a little bit further down, right? Maybe all the way down to here. Okay, so yeah, not much levels to really look at dollar CAD. We will have to skim through Aussie dollar and Kiwi dollar. Looking at them, I do like Aussie dollar above this level. Very nice support level. I mean, you could say this is the level. You could drag it as far back as to here, right? But I do like Aussie dollar above this level. Very nice, right? See price reacted off it, right? Continuously reacts off this level. Okay, right? You could say that, this could be the nicer level over here where price is starting to bounce from, right? So I will highlight this area instead, right? I will highlight that this would be a very nice area to kind of play a bounce from. Yeah, this would be a pretty nice level to play the bounce from. Okay, and how high can it go, right? Just play the bounce up to here would be enough. Notice the difference, right? I pick the level over here. It's very important to pick the correct target. I will not pick the level up here because there's only one candle that touches this. If I move it down to here, you notice that there is one candle, two candle, three candle, four candle that touches this, right? So this to me is a nice level to go. When it comes to take profit placement, remember, always put your take profit before a key level. Okay, so in this case, looking to play the bounce up from here all the way up to there. Okay, if we have to pick a second support level, maybe down here, right, as a recent swing low support, right? But I do like that price is actually at a 50%, if I'm not wrong. There you go, 50% Fibonacci retracement right about there, right? So a very nice reason why price might be seeing a bounce from the first support. Okay, we have requests from Jake, right, for index S&P, right? So let's take a look at S&P, maybe Nasdaq and or later. Okay, so price did bounce from our support level last week. It reached our resistance level. If you made money, congratulations, right? But same view, right? Same view as last week, right? We got a nice big resistance up here. We got another nice big resistance up here. A little bit hard to, this is the level. Okay, 61.8 Fibonacci projection, which we forecasted. Very, very big 61.8 Fibonacci projection that comes up to here, comes down to here, and projects upwards, which is this level, this goal level that you can see over here. It established our view last week for price to drop down to here, which it has done, right? And it has since bounced off. So if good amount of money, right? If you've got in on that trade. Now, this will still establish our first resistance. If it breaks this first resistance, then we look for the first support, right? Otherwise, you know, what I think might happen is that we might see maybe a little bit of a short-term reversal to the first support, because this is such a big level, right? Low key, I'm a little bit suspicious that price might just break up, touch this level, and then maybe go down from here. That so this this would be the upside confirmation. This could be the upside confirmation for price to reach this level, which is the first resistance, right? And once it touches that level, it drops down to the first support. So that could be what might be happening next. Okay. Dow Jones, right? Dow Jones, no key levels for me to look at, hardly anything for me to look at, so I won't try. I won't try, right? I guess if there's any level which is not bad, right? I do want to show it to you guys. A nice Nike tick. You know how I like to draw these Nike ticks. There's a nice Nike tick that lines up at the 127, just about over here. And this 127 actually lines up, you know, you could drag it further back, but you can just draw, you can also just leave it there. So it's easier to see, right? So we could see, I would suggest that this is the first resistance for you to look at. And if price reaches that first resistance, we could see a little bit of a short-term drop for prices to come down to the first support. But you first need price to come up here before dropping down. Okay, not two first supports, right? This will be the first support, this will be the second support. Okay, right. Gold is one we definitely have to look at, right? Well, look at that. So we forecasted the first resistance over here. Price really spiked up, close below the first resistance, second resistance, and dropped down to our levels. Okay, so really nice, really tricky trade, but you know, if you played it well, it could have made a good amount of money. Okay, what can we expect for gold now? We might see, yeah, I think gold was so nice, man, guys. Perfect call on gold, right? Really nice reversal from there, right? Everyone was saying that it continued going higher, right? But I think we call it so well. I suspect for gold, with that nice bit of price action there, looks like a little bit of a change momentum. We could expect a short-term reversal on gold, right? To take it down to these levels down here, right? Yeah, take it down to these support levels down here, right? This could be the view on gold, right? For price to drop. A little bit wary, you know, still a little bit wary about it. A bit hard to say. I will highlight this as the intermediate support level that price kind of needs to break through, right? But if it manages to break through this intermediate support level, we could expect it to go lower, right? The second second resistance level, we can't put it too close, right? So we're just going to put it like that. There could be a lot of volatility. If price closes below the first resistance nicely, we could see price drop further towards the first support. Okay, now last one I'm going to look at is WTI, right? Perfect, you know, it just dropped perfectly from our first resistance down to our first support, right? I think this was called on the last week, yeah, 4th December, yeah, 4th December, right? Continue to break below the first resistance, which means for oil, right, finally, right, we could call the drop on oil first resistance over here for price to finally drop all the way down to this. So notice that you could draw this as the first support level. You could drag it further back to here, drag it further back to here, further back to here, even further back to here, right? So this is a very nice first support level. It's a very magnetic level, right? And we could be seeing price continue to drop very nicely, right? You can see very nice trend line. Some would argue, right? Some would argue that it's a channel. Is it a channel? I have no idea. Let me see. Yeah, some would argue it's a little bit of a channel, right, for price to go down, but nice bit of Ichimoku resistance above. A lot of things are lining up to tell us that price could drop from that first resistance down to the first support, right? And of course, we if you want to play a very nice risk reward setup, you know, could put the second resistance over here instead of the second resistance being up here. You know, you could put the second resistance over here to get a very nice risk to reward trade. Okay. A request from Tariq for pound yen. I think it's been a while. Pound yen. See you, Jake. All right, no worries. Thanks for tuning in. Let me see. Right, I think. Wow, pound yen is tricky, man. Definitely a support level over here, right? You can see price responding very nice. The trick is to use the wicks. If I pick this wick, I got no support level. If I don't use the wicks, right, and I use the wicks over here, you notice that I can get this support level over here. I do think pound yen is so tricky. But what I can let you know is that usually, right, if you have a view on pound dollar, and like you have a view on pound dollar and a view on yen, right? So on pound dollar, we're expecting pound to weaken a bit before strengthening, right? And for yen, you know, we expect yen to strengthen, right? Or rather to weaken a bit before strengthening, right? So that means if you put pound dollar and dollar yen together, what you could be getting, right, is for actually, if both are going to weaken at the same time, it's a little bit tricky, right? But I would say it's hard to call this movement. It's a little bit hard to trade pound dollar. I would prefer not to. Hard to, you know, look at this. It's hard to find any key level, right? But if I have to, probably look to buy on dips for price to come up to here, right? That means nice little bit of support that you can see clear support supply line over here, right? Price might inch up to this level here, and once it reaches this level, you could play a short reversal. But yeah, it's probably going to inch up a little bit more towards the first resistance. Okay. Now, anyway, that's it for me, guys. Thank you for tuning in into today's session, right? Really appreciate it. If you found it useful, help me leave a thumbs up, right? It really that really help our YouTube algorithm be able to find our videos. I will let you know that we have another live session. We have another live session coming up soon in about 12.5 hours. Oh, dollar ZAR, yes. Let me take a look at dollar ZAR in a bit. Okay, we have another live analysis session. This is pre-market live analysis session with Emily here. 12 hours. No, it's with Peggy, I think. With Peggy, right? So just keep a watch out for it. It's going to come in 12 hours. So be sure to tune in into that session. Just let me take a quick look at dollar ZAR. Oh man, how do you even trade this thing? The support lines are not clear at all. If I were to play a short-term reversal, maybe off here, right? I might play this as the first resistance, this as the second resistance, and if it does reverse, right? is not clear at all, but I do see a big price responding very nicely to this support level over here, right? Just look at the way it responds to this level over here, right? Here and here. So if I were to play a move, probably a move of the first resistance for price to come down to this support level. A little bit hard to call for dollar ZAR. I mean, look at this, right? Yeah, and if there's one thing I'll tell you guys is that, right, money can be made on so many other instruments, right? The key setups for this week, definitely dollar franc, right? Very nice setup, right? I think it's probably the key setup I'm going to take a trade from, right? If price drops all the way there, right? I think WTI, a very clear move, you know, if you can play the drop from here, continued drop towards first support, right? We do have a pretty good move on pound dollar too if price comes all the way down there, right? And also a pretty good move on sorry, I think it's euro dollar, right? If price comes down here to see a bounce. So those will be the key views for this week. UMass, you are late, my man, right? It might be the time zone difference kind of thing, right? Our daylight savings, right? But we are at the end of today's session. Thank you very much, everyone, for tuning in, right? This is, I think you might be able to rewind a bit to watch the previous, what I covered previously. But anyway, right? I will see you guys next week for our next session. Until then, stay safe, trade safe. Peace out, guys. Thank you for tuning in, everyone, right? Bye-bye.